everyone, and welcome back to the channel. Today we're going to be looking over my investing portfolio through M1 Finance. We're going to be buying some additional companies here today. Normally every week we do like 1 to 2. This week I'm going to actually be adding 4 new shares, and I'm actually going to be adding a new sector, so I'm pretty excited about that. And we're going to of course go over how the portfolio is doing entirely, like we do every single week. Okay, so without wasting too much more time, let's go ahead and hop onto my M1 Finance portfolio and take a look and see how we're doing. So as of recording this video, we are sitting at $316.49, which is a gain of $4.18 for the day, which is 1.34%. Not too bad. The market's doing fine today. For the week, we are up 1.5%. For the month, we're actually down 1.87%. I believe for the quarter, yes, the quarter we're still positive at 4.28%. And then for the year, we're actually still up 10.24%. So not too bad, especially with the market kind of going up and down. So as you know, of course, we are always adding in new stocks and depositing in money every single week. Let's go ahead and take a look and see how last week's 10 bucks actually broke down. So I'm going to click on here. So last week actually bought into 11 different companies that we have. So as you can see here, we had 97 cents go into Ross, $1.34 go into New Residential, 44 cents went into Target, 16 cents into Church & Dwight, 144 into Cisco, 55 cents into Costco, and 23 cents into Clorox, 121 into Tesla, and 254 into Vanguard. Got 35 cents that went into McCormick, and then 75 cents went into Realty Income. Last week, our new stock that we bought, in case you missed the episode, we actually ended up getting Cisco. So not a ton went into that company this last week. That's okay. The reason for that is based off of the percentages. So if we go back into our portfolio, we can go into the tech sector here, and we can see that Cisco was added into the group here. I put a target at 20%, but based off of how all the money kind of cycles into the M1 Finance account, it only ended up getting that $1 and some change. But if I really wanted to, I can actually deposit my weekly amount or whatever amount I want directly into this sector instead of the overall fund, so I can have more going into these different companies if I wanted to. But I'm totally fine with how it's going in right now. So we're gonna go ahead and purchase these new companies and add the new sector. But as always, I do have to let you guys know, of course, I am not a financial advisor. This is just me sharing my journey through investing. Hopefully this kind of helps you guys get an idea, but do your own research and talk to a financial advisor if you need any additional assistance when it comes to investing your money. So with that being said, let's go ahead and go through the process of buying these new companies. Now, if you've never seen us add a new sector, you're in for a treat because you're going to see how it's done here today. So we're going to go into the research tab, and we're going to go into my pies, and we're going to go into adding in new pie. So the sector we're going to be adding here today, I don't know if you guessed it or not, but we're going to be adding a financial sector. So we didn't have one before, and there's a couple companies I want to add in, and we're going to go over each one and kind of my reasonings for them as well. Nothing super intricate, but we're going to add them in here. So the first one you might not have heard of before is called TSS. As far as the ticker symbol, so it's Total System Services. So right now their price point is $128.05 a share. Their dividend yield is abysmal. It's like 0.41, so it's not a lot. This one is one where I'm actually going in for the growth opportunity. I just really want to also grow my principal, not just getting the dividends. So I'm kind of working a little bit of both angles there. Obviously, they have a decent payout ratio. Their growth rate is pretty slow, and they haven't had a dividend growth in general. For the most part. But the overall fund itself is doing pretty well, and I want to continue to kind of ride, hopefully, that growth over time. This company essentially just does a lot of the charges for running your credit cards and stuff, so it's through like a merchant service. So I'm interested in adding them, which of course we are. I'm going to go ahead and add that to the basket. And then next up is going to be this one that you probably actually heard of before, or you might even have them. And this is Discover. So Discover Financial Services right here. So right now they are trading for $82.95. They have a decent dividend percentage of 2.16%, but their growth rate is actually really, really good. So even though the percentage is somewhat low because you Generally, if you're looking at dividend investing, you want to do 3 to 4% or 2.5 to 4%. But their growth rate is still really, really good. So it's in the double digits. So I'm happy about that. They've had 9 years of growth so far with their dividends, which I'm excited for. And overall, the company's doing pretty well. And I see some really good opportunities for the long haul, because I know they're getting into like personal banking with online banking. And you'll kind of see that trend here with the rest of these companies as well. So I'm excited to add them into the portfolio. We're going to go ahead and add that to the basket. Next up, as I kind of mentioned, we're going to be kind of talking about some online companies. And this one is going to be with Ally. So Ally, if you guys aren't familiar, is also an online bank. And this company has been doing pretty well for the last couple of years. They're currently trading at $31.33. Their dividend yield is at 2.19%. So nothing amazing, but still good payouts. There's a lot of growth opportunity for this one as well. Their payout ratio is nice and low. They don't have a 5-year growth rate right now because they've only been paying for 3 years. So I see some really good opportunities to earn a lot of dividends over time with this company, especially at the cost right now that they're at. I think they're going to be a good addition. We're going to go ahead and add them to the basket. Okay, so this next one is going to be a little bit off of the side here. This company has been kind of on the downturn for quite a while, but I see some opportunities and the things that they're doing over the next couple of years to really grow their funds. This one is definitely going to be a lot more risky. And this is why it's important to always do your own research, because if you copy somebody else's investments, you don't understand what the risks are. So for this company I'm going to be adding, there is definitely a lot more risk, but I'm going to have it as such a small percentage of my overall portfolio that it won't make a big impact if something happens to them. But I kind of believe in what they're going for in the future. And I actually started banking with them for one of my businesses. And so I'm excited to see kind of how everything works out. And if there's a lot of opportunity, this can actually yield some really good results in the long run. So this company is going to be BBVA, which is also, of course, another banking institution. This one, if we go on to the Seeking Alpha, right now they're trading for $4.85. So very, very low. Their dividend yield is really high, but that's because their actual stock price is going down all the time. So it's not actually a good thing that their dividend yield is so high, but their payout ratio is still really, really good, which is kind of a little bit odd, because normally if the dividend yield is starting to skyrocket, the payout ratio also starts going really, really up. Well, their dividend growth is really poor over the last 5 years, and they've only had 1 year of actual growth. But what I do see is the opportunities for the long run with this company. If I look at like the last year here, their high was $6.78. They're almost at their low right now in the last 52 weeks, which was $4.75. But again, I see some opportunities in the long run here with this company. So I'm excited to add them in here, see how it goes. Like I said, it's going to be such a small portion of the portfolio. It won't make a difference if something happens to them. And that's why diversifying is so important, because if I went, 100% into this company, or even 50% of my actual funds into this company, and something happens, good or bad, that's going to have a huge impact. Because if it's bad, I'm going to lose a lot of money. If it's good, I'm going to definitely make a lot of money, but there's too much risk involved with that. Versus if I have this as, such a small percentage that it doesn't really make an impact if it goes, sideways, but if it goes positive, I just have the opportunity to earn a little bit more money. So what I'm going to do is, of course, add them in to the basket here. And now what we're going to do is click the add button, which you can't really see because it's like hidden all the way at the bottom there. So we have this new pie. As always, it just kind of edits itself as new pie. We're going to change the name. And right now, this is actually set up at 25% a piece. I can change these if I want to. I kind of like that percentage, but I also really want to kind of maybe put up Discover like around 30% and the Ally at 30%. And then I can lower the TSS down all the way to 15%. So to me, this looks a little bit more of how I would want this pie. And of course, if I add more companies, it's going to have to switch around. Okay, so we're going to go ahead and save this right over here. And now we have our new financial pie. Now, here's what I really love about M1 Finance when you create these individual pies is you can see right over here on the side what these actual funds did over the last 5 years as a group, just these stocks together. So if I went to the last 3 years, the last year, the last quarter, you can break this down and see exactly how much all of this return did for you, which is really, really cool to give you some great insight on each sector individually, which is probably one of my favorite portions of M1 Finance is to be able to see this. So with these 4 holdings, this actually earns me, if you guys can see here, a total dividend yield of 3.258%. So of course, averaging all of them. Now I'm gonna go ahead and add this to my portfolio. And now I'm gonna have to switch out my percentages on my overall portfolio as well. Of course, we want some money going into the financial group here. So I think I'm gonna want my financials maybe around close to like 10%, maybe like 8%. I gotta take some stuff away, of course. I kind of told myself I was going to keep Vanguard, if you guys remember, at 50%, but as I keep growing and adding in all these diversified funds, I don't need the Vanguard one as much. I still want to have a majority hold in Vanguard right now, but I think if I take away a majority of this, I think I'll probably actually go to 45% on Vanguard, and then take a little bit from consumer and then a little bit from real estate as well. Let me know what you guys think on the bottom, how this breakdown goes. And while you're in the comment section, don't forget to hit the like button on this video too, because it really does help share this video out with other people and continue to grow our community. So I'm gonna go ahead and confirm that right there. So what we're gonna do is first I'm gonna put in the 10 bucks, and then it usually does the estimate of how much we're gonna get. So I'm gonna see how that works out. If I like it, I'll keep it. If not, I can actually switch out the adjustments. All right, so we're gonna go ahead and add the $10 in today. Now, if you wanna get started with M1 Finance as your investing brokerage, you can actually go ahead and click the link in the show notes down below to sign up for M1 Finance. Now, that is an affiliate link, which means I do get supported for you guys going through that link, which helps me actually continue to produce videos like this every single week. So I do thank you for that. But honestly, it's $100 to get started for a taxable investing account. Super easy, as you guys see here, every single week to really just kind of put in a little bit of money and actually have an impact for your future. And you don't have to be putting in crazy amounts. As you see, with $10 a week, I'm actually building up a decent sized portfolio here. You know, nothing compared to some of the other channels, but you know, still a really good amount. And if you actually want to see like more of a pros and cons video when it comes to M1 Finance, more of like a breakdown of it, I'll have my video right over here at the top. You can check that out. My video down here at the bottom if you want to keep on watching more videos here on the channel. And if you made it this far, make sure you hit that subscribe button down below. And I'll catch you guys in the next episode.